Hi, Spencer here. Today I'm going to talk about the coronavirus, right, or the Wuhan virus or the COVID-19, right? It says the same virus, but I'm not going to talk about like the virus per se because there's already been a lot of stuff online about that, right? Rather, I'm going to talk about how the virus is going to affect your portfolio, right? Or rather, what happens, in a worst case scenario, right? How is your portfolio going to fare? So if you think about it, or rather if you look at the charts, you'll see that the US market, right, and most of the global markets have been in a 10-year bull trend, right? What this means is that over the 10 years, we have just seen the market go up, right? And the largest correction was at most like 15 to 20%, right? So there's nothing really scary. So at this point of time, most people will be thinking, that they are probably like stock picking genius. Everyone is smart because everyone's portfolio is up 5, 10, 20%, right? And the best thing is, or rather the worst thing is that, there wasn't even any skill required, right? All you had to do was to buy an ETF of the whole index and, you have made a lot of money, right? You have had excellent returns, right? So the problem with such bullishness, right, is that people lose track of or lose sight of their portfolio strategy, or rather they have been getting away without having a proper portfolio strategy in place, right? So now you need to think about how resilient is your portfolio, how anti-fragile is your portfolio, right? So for example, in a worst case scenario, right, if stocks drop say 50%, right, how would that affect your portfolio? Is it going to be a disaster, right? So this brings me to the idea of asset mix, right? So if you have read books by Ray Dalio, right, or you have read stuff about him online, he's the founder of the Bridgewaters, right, one of the largest hedge funds. And I found the idea of his all-weather portfolio pretty interesting, right? So this idea of the all-weather portfolio is that you create a portfolio that you can just live there, and you leave it there, and you have to rebalance it once in a while. But the main idea of the portfolio is that it does well in any kind of market condition, right? So when the market is very bullish, right, it may not perform that well as compared to say a pure equity strategy, right? But its real value comes when the market drops, right? When say the stock market crashes, or in times of crisis, right, when everything is going haywire, right, the portfolio can still continue to churn out positive and safe returns, right? So that is the power of an all-weather portfolio, right? By diversifying your assets, right, diversifying your risk, you may give away some of the profits because you may not do as well as a pure equity, but the main thing is that it really protects your portfolio when the crisis strikes, right? So maybe this will be a good time to think about your own portfolio, and rather the mix, right, of your portfolio. Is your portfolio like 80 to 90% equity, right? Do you have bonds in your portfolio? How much cash do you have on hand in case you need to buy new stuff, right? Do you have things like that hedge against a fall, right? Like maybe gold, Bitcoin. So these are like the different types of assets, right, that can be in a portfolio. Because I think for most people, when they hear portfolio, straight away they think about stocks, right? Because that's the only thing that they know in a portfolio, right? So the final thing, right, that I would like to give to you, right, is to really think about, when you think about your portfolio, right, say if the market really crashes, right, and it goes into a recession, right, is that a disaster or an opportunity, right, for you, right? Is it, because for everything that goes up, right, something goes down. For everything that goes down, something goes up, right? So when the market crashes, right, there are instruments that they go up as well. There could be things that are cheap, right? So when facing such a crisis, right, if you look at the way your portfolio is made up, right, is it going to be a disaster or an opportunity for you, if the market crashes, right? So I think this will be a good time to take a genuine look at your own portfolio and review it, right? You know, so that you know, at least be prepared, right, in the worst case scenario, right? So that's it. That's all I have for this video. Right, if you enjoy it, do remember to like and subscribe for more videos, right? And I'll see you in the next video.